October 1929. The Jazz Age was roaring. The stock market was booming. And the American dream seemed unstoppable. But then, in a matter of days, it all came crashing down. Fortunes vanished. Banks failed. Lives were destroyed. The Wall Street crash didn't just shake America. It sent shockwaves across the globe. This is the story of the greatest financial collapse in modern history and how it sparked the Great Depression, the darkest economic chapter the world had ever known. The 1920s were a time of excess. America had emerged victorious from World War I, and industry was booming. Automobiles, radios, and consumer goods flooded the market. Stock prices soared. Ordinary people, teachers, farmers, factory workers, were buying shares on margin, borrowing money to invest in the dream of endless profits. According to historian Frederick Allen in Only Yesterday, an informal history of the 1920s, this speculative frenzy created an illusion of wealth that had little grounding in reality. But behind the glittering facade, warning signs were everywhere. Farm incomes were falling. Consumer debt was rising. And stock prices were dangerously inflated. October 24, 1929, Black Thursday. Panic swept the New York Stock Exchange. Prices plummeted. The ticker tape fell behind by hours. Brokers shouted. Phones rang off the hook. Wealth disappeared in seconds. According to the New York Times archives, the market lost $11 billion in value that day. Bankers tried to step in. J.P. Morgan and other financial leaders attempted to stabilize the market by pooling money to buy blue-chip stocks. It worked, for a moment. But it wasn't enough. The real collapse was just beginning. October 28th, Black Monday. And then October 29th, Black Tuesday. The crash accelerated. An estimated 16 million shares were traded in a frenzy of panic. Billions vanished. Families lost everything. Some investors in despair jumped to their deaths. The American economy was in freefall. As economist Kenneth Galbraith later wrote in The Great Crash 1929, the collapse came as the inevitable end of an orgy of speculation. It wasn't just a market correction. It was the beginning of a global crisis. Banks failed. Businesses closed. Unemployment skyrocketed. By 1933, nearly 25% of the American workforce was jobless. Soup lines stretched for blocks. Homeless families built makeshift shacks in Hoovervilles. According to historian David M. Kennedy in Freedom from Fear, the crash revealed deep flaws in the American economy, flaws that had been ignored during the boom. The crisis quickly spread overseas. Europe, still recovering from World War I, was hit hard. Trade collapsed. Political unrest grew. The Great Depression had begun. The Wall Street crash didn't cause the Great Depression alone, but it was the spark. It exposed how interconnected, fragile, and unequal the global economy had become. Governments responded slowly. The U.S. Federal Reserve failed to act decisively. President Hoover's policies did little to ease the pain. It wasn't until Franklin D. Roosevelt's New Deal in the mid-1930s that hope began to return. The legacy of the crash lives on. It led to reforms like the Glass-Steagall Act and the creation of the SEC, aiming to prevent such a disaster from happening again. The story of 1929 is more than a financial tale. It's a human one, of greed, denial, suffering, and survival. As history shows, unchecked speculation and blind optimism can lead to ruin. But from the depths of crisis can come change and resilience. What do you think? Could the crash have been avoided? Are we at risk of another one today? Share your thoughts in the comments below. And don't forget to like, share, and subscribe for more powerful stories from history's turning points.